know what's crazy? Most people think you need thousands of dollars to start making money in crypto. They think you need to be an early Bitcoin investor or a tech genius sitting behind 10 screens. But here's the truth that almost no one talks about. You can literally start with 50 bucks. And if you understand how to move smart, that small seed can grow into a lifetime income stream. Not overnight, not with some hyped meme coin, but with a real strategic plan that works in any market, bull or bear. See, the game isn't about getting rich quick. It's about getting positioned smart. The crypto world isn't built for those who chase pumps. It rewards those who build systems. Because the people who make consistent money in this space don't trade 24/7. They own positions that keep paying them through staking, yield, compounding, and timing cycles. That's the difference between noise and wealth. So, let's talk about how a $50 crypto investment can turn into something that actually pays you every single month. And again, this isn't financial advice. It's the framework used by investors who stopped chasing trends and started compounding long-term wealth. The first thing you need to understand is that $50 is not capital. It's leverage. You're not buying coins just to hold. You're using that small amount to enter the system, a system that multiplies itself if you stay patient. For example, take networks like Ethereum, Solana, or Cardano. These are ecosystems. They're not just coins. They're economies where you can earn, stake, or even build income streams without needing massive upfront capital. Let's say you start with $50. You don't throw it all into one token. You divide it smartly. You put maybe $25 into a foundational asset like Ethereum or Solana, something with deep liquidity, real network use, and future upside. Then you take $15 and allocate it into a staking or yield protocol that actually pays rewards for securing the network. And the last $10? That's your learning capital, something to experiment with in DeFi or Layer 2 ecosystems. Because your first $10 loss is actually your best investment. It teaches you how not to lose $1,000 later. Now, here's the secret most beginners miss. Your goal with that $50 isn't to flip it into $10,000 instantly. Your goal is to turn it into an income engine, something that earns passive crypto, even a few cents a day, because that's where compounding starts. For example, staking $25 worth of Solana might earn you 6 to 7% annually. That's not huge in dollar terms, but it's the foundation. The trick is to reinvest every bit of yield you earn. You're not spending. You're growing your position size automatically. And once you cross the psychological barrier, once you start earning money passively, no matter how small, something clicks. You realize this isn't gambling. It's a system. The earlier you master it, the less you depend on the market's mood swings. Let's go a little deeper. The concept of layered income streams. In crypto, there are three main income layers: yield, protocol growth, and narrative momentum. Yield comes from staking or lending your assets. Protocol growth comes from investing early in networks that expand, like early Polygon or Cosmos. And narrative momentum comes from holding assets that benefit from the next wave of adoption, like AI coins, decentralized storage, or tokenized real-world assets. The key is not to predict the next trend, but to position before the trend. That's where your $50 becomes strategic. You're building exposure, not chasing. The problem with most investors is they buy when the trend is already viral. Smart investors accumulate before the noise, while everyone else is distracted by memes and hype cycles. Let's take an example. Chainlink. For years, it wasn't sexy. It was just that Oracle thing. But the real players were accumulating while others ignored it. Then, when narratives around data and automation exploded, Link tripled in value. The same thing happened with Solana and Avalanche. They weren't instant stars, they built silently, then exploded. So the real move with your $50 isn't timing the top. It's surviving long enough to benefit when the market cycles upward. Now, once you've built a small income system, you can scale it. Not by adding more cash, but by adding more knowledge. You start understanding compounding protocols, liquidity pools, and auto-yield systems. For instance, staking ETH on Lido or Rocket Pool allows you to earn while keeping liquidity. Or using Layer 0 and cross-chain protocols lets you position your assets where yield is higher but risk is lower. It's advanced stuff, but once you get it, you'll never look at $50 the same way again. And if you want real consistency, here's a power strategy very few talk about. Earn in stablecoins, reinvest in growth. It's simple. Use DeFi platforms to generate 5 to 10% yield on stablecoins like USDC or USTT. Then move those profits into growth assets like ETH, LINK, or SOL. You're protecting your base while compounding your upside. That's how small portfolios survive volatility. Let's talk psychology for a second. Because 90% of crypto investors fail, not because of bad strategy, but because they have no patience. They sell too early, chase shiny coins, or panic when charts go red. But real wealth in crypto is transferred from the impatient to the patient. Every bull market rewards those who positioned quietly when nobody cared. Every bear market resets the game for those who built during silence. So if you're watching this and thinking, but $50 can't change my life, here's the truth. It absolutely can, if you change your approach. That $50 teaches you how markets move. It gives you skin in the game. It makes you observe. And that awareness is worth more than any signal group or paid course. Because the moment you start thinking like an investor, even with $50, you're no longer playing the short game. Now, I'm not saying this is easy. Crypto's wild. You'll get tempted by quick pumps, fake projects, influencers promising 100 times coins. But if you build your foundation with discipline, staking, yield, learning, you'll realize that slow money becomes real money. And real money never leaves the game. So here's your blueprint. Boiled down. Start with $50. Break it down. 50% into strong Layer 1 or Layer 2 assets. 30% into yield or staking. 20% into learning and experimenting. Track your progress every month. Reinvest all your yield. Keep reading. Keep watching the projects you believe in. Within 6 months, you won't just have more crypto, you'll have a system that grows itself. That's what long-term wealth looks like. Not luck, not hype, structure. And the best part? You can start right now. While everyone else waits for the next bull run, you're already building your income engine quietly. Because the people who win big in crypto aren't the loud ones posting gains. They're the ones who built foundations when no one was watching. So don't overthink it. Take your $50, make your plan, and start compounding. Because once you realize how to make your money work for you, that's when the real game begins.